So stock prices are finally rising. And to those of you who have checked your brokerage account the past couple of days, I'm sure you guys are feeling like a sigh of relief to see your stock portfolio price reach a little bit of a level of normalcy. However, in the grand scheme of things, the stock market is still at ridiculous lows compared to earlier this year, let alone years ago. So it's still a great opportunity to take advantage of the stock market where it's at, considering that we'll hopefully be experiencing more increases from this point on. Now, as a long-term growth and dividend investor, I've personally been thinking to myself, what's the best strategy to invest in stocks, especially during a time like this when we're undergoing some sort of recession? And that's led me to two different styles or two different types of stocks to look forward to, and those are ETFs and individual stocks. So in this video, that's what we're going to talk about. Hopefully we can answer the question on which one's more beneficial. So let's get started. What's going on, guys? My name is Darren Jackson, and just like a lot of you, I'm sure you're thinking about how should I approach investing in the stock market right now while prices are at a ridiculous discount and hopefully rising consistently. And as a dividend investor, as I've said before, I've thought of two different primary styles of dividend investing into the stock market, and those are individual stocks and ETFs. Now, out the gate, it's definitely going to determine what your personal preference is. That may mean how long you plan on holding on to the stocks. If you're a beginner investor, if you have time to do research, then right then and there, you'll be able to determine which one's more important for you. But in this video, I wanted to compare the two to help you determine which one is best for you during this recession-like period that we're kind of undergoing. So we all know what individual stocks are, right? Those are stocks like Apple and Alphabet and Starbucks, you know, the bougie stocks. And then you have your ETFs. Now, before we go on comparing the two, I figured it'd probably be best to answer the question that I once asked a year ago: what exactly is an ETF? All right, guys, so an ETF stands for an exchange traded fund. Now, to help you understand more of what an exchange traded fund is, let's look at some really common indexes. So you have indexes that basically summarize the entire stock market. And when you research how the stock market is doing, they're going to be defined by these top three, if not a few more indexes, such as the S&P 500, Dow Jones, and NASDAQ. So now with the S&P 500, those are made up of the top 500 companies within the United States. And there are ETFs that mimic that, such as SPDR, Vanguard, which is VOO, and the Gold Trust, which is another S&P 500. The difference between those three ETFs and this index fund, S&P 500, is that those three ETFs can be traded just like you trade individual stocks. So you can buy it when it opens, hold on to it for as long as you want, and even sell it as quick as you possibly can before the stock market closes. So speaking of individual stocks, as I've said earlier in the video, choosing between ETFs and investing in individual stocks definitely depends on your personal preference, which may start with how experienced you are in investing in stocks in general. So if you're a beginner, it may not be easy to understand what to research in when picking a high dividend paying stock, let alone have the time to actually do it. So one of the benefits of investing in ETFs is that you're reducing that time, let alone having to research any individual stocks, and you know that every penny that you put into an ETF is potentially being divided amongst hundreds of different stocks. And that leads me to the second benefit of investing in ETF, which is diversification. So for example, the S&P 500 can be resembled as a stock portfolio that is divided among many sectors, including technology, healthcare, and consumer staples, amongst a plethora of others. So you don't have to use the time to research individual sectors and know, based off external situations, including the one that we're currently in, what stocks or sectors are being impacted negatively and positively. You can just put your money in and let the rest of it work. And that sounds a little scary, but mind you, there is a low risk of investing in ETFs. So think about this. If you have a certain situation to where it impacts an entire sector, or more specifically individual stocks, to where they may have a change in ownership, or there's a lawsuit against them, or they have a failed product, that's obviously going to lower the worth of their stock because people are going to sell quickly. But if you have a few stocks within a plethora, potentially hundreds of stocks that are failing, then more than likely you're not going to see a drop in your total stock portfolio price. and more than likely you're not going to see a decrease in the return in dividends that you're receiving every month or every quarter. So with that, investing in ETFs is definitely important. However, if you've been investing in stocks, especially dividend stocks, for at least a few years, you may know that investing in ETFs doesn't offer the most flexibility, and that's one of the benefits of investing in individual stocks. You're able to select your own individual companies that you know are going to do well and are going to beat the stock market, and you can invest in those and create your own stock portfolio. Also, as I mentioned, ETFs do offer dividends, and that's very important for me as a dividend investor. I don't want to get into an ETF that doesn't give me a monthly or quarterly return, because I'm all about gaining passive income over time. But they may only offer percentages ranging between late 1s to maybe 3% of investments, such as Vanguard, which I believe offers over maybe 2.1% in dividends as of last Friday. But there are plenty of individual stocks that offer more in dividend investing, which can be a little bit risky. But if you take the time to research things such as their net worth, their PE ratio, and their history of increasing their dividends, then seeing they offer a high percentage in dividends on a quarterly or annual basis still may give you some comfort, because you know the chances of them decreasing that dividend return isn't that likely. So with that, you have the opportunity to invest in individual stocks that have high dividend paybacks and have more opportunity to receive more in dividends in comparison to investing in multiple ETFs that may only offer 2%. And even more importantly, or at least to me, at the end game, you want to have a higher growth. You want to be able to put thousands of dollars in, and then decades later, those stocks are worth tens of thousands or even hundreds of thousands of dollars. So with that being said, you're able to target individual stocks that you know are going to experience long-term growth, such as Apple, for example. And being able to research and invest into the proper stocks will give you the opportunity to not only beat the growth of ETFs, which are steady but still kind of slow, you also have the opportunity to beat the annual increase of the entire stock market, which normally ranges between 7 to 10% on an annual basis. So there's one more ETF that I wanted to mention last, just because I feel like, in my opinion, it will help simplify how important it is to invest in an ETF, especially during times like this. And that ETF is called the Standard & Poor's High Dividend ETF, or the SPDR. Now, the breakdown of the SPDR is pretty much like this. Now, out of those top 500 companies tracked by the S&P 500, the SPDR takes the top 75 highest dividend paying stocks, and then out of those stocks, it takes the top 50 lowest volatile. So in my opinion, the SPDR is like a huge 1-2 punch, because every penny and every dollar you put into SPDR, you're putting your money into the highest dividend paying companies that are also the lowest volatile. So yes, that does mean that you're not going to experience overnight success. You're not going to go to sleep with $1,000 and wake up a millionaire, but at the same time, you're not going to go to sleep with $1,000 and wake up with absolutely nothing. These stocks are known to grow, now slowly, but grow over a significant period of time, which is important to long-term dividend investors like myself, and potentially you as well. And that's especially important during this period of time where we're undergoing what may considerably be a recession due to the pandemic that's currently going on right now. But we have had something similar go on back in 2007. Now, it wasn't a pandemic related situation, but it was a recession that lasted for a couple of years. So if you look at a chart of the S&P 500 back in December of 2007, when this recession started, you notice between then and about March, the S&P 500 lost almost 50% of its total value. But as investors know, and if you're a new investor, keep this in mind, guys, every fall ends in a gain. The stock market isn't going to fall forever, and the economy isn't just going to crash and burn. There will eventually be gains. And if you invested within the S&P 500 or ETF similar to it within that period of time in March of 2008, then you would have made thousands of more dollars within 2009, 2010, and beyond up until this point, despite the potential recession that we're currently in. So that's what's important to me, and that's why I feel like you need to take advantage of ETFs as prices are low right now. Now, with that being said, make sure you take all this information to your own and understand what type of investor you are, which I couldn't stress enough at the beginning. So like me, if you do have the time to do research on individual stocks and understand what stocks are beneficial for you in the long term, then definitely do that, because that's something I'm doing as well. And of course, I'm learning over time. So I'm personally investing a lot into individual stocks and more into ETFs so they can both help me with long-term growth and dividend payout. So with that being said, guys, make sure you guys drop a comment and tell me, how are you investing? Are you focused more on ETFs? Are you liking individual stocks better during this potential recession that we're currently in? And if you like this video, make sure you leave me a thumbs up, like, and definitely subscribe. It's gonna help this small YouTube channel that I have out. But until then, take care.